As inflation and currency pressures continue to pose major headwinds for businesses in Africa, OmniRetail recorded a 9% growth in gross margins. Dipankar Rustagi, the Chief Executive Officer of OmniRetail, joins me now to discuss how Africa's B2B e-commerce ecosystem can thrive in challenging times. Thank you so much for your time today, Dipankar. Definitely quite a time here when you look at what's playing out in the markets here. And I'd like you to speak to that downturn we've seen first, and how companies like yours are trying to stay ahead.
Thanks a lot, Kenneth. Thanks for having me. I would like to tell you about the challenges that are faced by the retail landscape. In today's scenario, the retail landscape in Nigeria, in these economic scenario, has really been underprivileged. There are challenges around working capital. There are challenges around the availability of working capital as well as the interest rates. There are challenges around the cost of logistics that has increased, and because of the inflation, devaluation, consistent increases in basic consumable prices on a day-to-day. This has really hit the retail market in a big way. But that being said, retail is one of the sectors that stands strong and services the economy in the highs and the lows, whether it is COVID or whether it is an economic downturn. So I think that sector has done well. And in the last 6 months, we have really focused on bringing in the efficiencies in these tough times so we can help scale these retailers, distributors, and logistics providers to build the right ecosystem. And with the help of our ecosystem partners, we have emerged profitable in such tough times.
Yeah, because I'd like you to speak to the importance of having those strategic collaborations play out there. I see that you partner with about 65 brands in Nigeria and Ghana. And talk us through how that came to be and how that is also helping to pivot your growth.
Absolutely. These partnerships come in an instrumental way. There are a large number of manufacturers who've invested significant amounts of capital in the manufacturing infrastructure, in building the reach for their products, but each one of them had to do it individually. And because of doing it individually, their cost of logistics, their cost of warehousing was being subsidized by them. They had to take the risk of working capital risk in the trade, which became really challenging and was diminishing the margins for the entire value chain. Us coming in and bringing these different stakeholders, especially the brands, distributors on board, has helped us digitize the entire chain. Also digitizing the creditworthiness of the different stakeholders in the chain, making it very clear how and who can help scale the market in the most difficult times.
Yeah, because when you look at the space there, I'm trying to imagine now the competition in this space, because I'm definitely looking at how since quite a number of players in your category kind of fizzled out over time because of some of these challenges. And what's the future of competition in that space looking like?
Yeah, undoubtedly, our space is a very difficult space to execute in, keeping all the external factors as well. As much as we are a startup, we are also an operations-heavy company, which is training different stakeholders who are traditional business owners who have been in the business for decades to how to transform their business for the new age. So we've seen a lot of challenges in the last 2 to 3 years. A large number of companies have come into the space, have raised capital, but have not been able to derive the right unit economics that is required to scale the business. A large number of players have also seen this as a traditional startup industry where your top line is what matters, whereas in this industry, you are actually servicing the stakeholders, the distributors, and the retailers, not replacing them. So it's important for you to see where is your value addition. Without the right unit economics, without the right percentage margins in the business, if you scale up, it is just burning the capital invested in by the investors. So that is what we have seen with some of the players. A large number of companies who have raised funds have pulled back and are finding right mergers, acquisitions, collaborations to see how they can collaborate and scale in different markets.
Yeah, because at the heart of this also is also how your strategy around your supply chain. And I'm thinking about what OmniRetail has done and how you see that future of retail play out when you look at the supply chain side of things.
Yeah. So I think the future of the future of retail is not modern trade in Nigeria and similar economies. It is about modernizing the traditional trade. It's a very important part where digitizing the existing stakeholders who contribute significantly to the employment, who contribute significantly to the day-to-day of our economic sectors, need to be uplifted, need to be supported. And to do this, you need to build this infrastructure that is required in servicing them effectively. So, building the future of retail, building the future of supply chain for essential goods requires you to have digital warehousing sectors, digital logistics partners, and these are not going to emerge from an international investment. These are going to emerge by the digitization of the existing stakeholders who've been doing this for the last few decades. So I think that's where the real opportunity is, how the digitized supply chain in Nigeria and similar economies will look to service the economy more efficiently.
As you continue to build now and plan for the future, now I'd like to look at how you're looking at funding, because it's also very critical for the future of the work that you're doing. I see that you've gotten already $20 million from both in equity and debt, and you also got some commitments in about 10 million from some of your investors. And I'm trying to picture how that is going to look going down the line then.
No, absolutely. So I think raising capital is an essential part of building a strong, scalable startup. And in the situation that we are in, we are all very clear that it's tough times won't last. It's tough businesses that is. And to build strong businesses, you will require the right amount of capital to scale them, the right quality of capital as well. So we've seen that because of the global economic scenario changing, raising capital has become tougher than before. But we also have seen large number of players, large number of stakeholders who are invested in Africa for the long term. These are development institutions, these are development finance institutions, these are family offices who see Africa as the core of the next growth journey. These are institutions who are still investing in right sort of businesses, who have the right economics and see how value addition will not just be growing and building one sector, but building those businesses will open up growth in many other sectors. So I think there is sufficient amount of capital available. It's just about tapping the right quality of capital for your growth journey.
All right, definitely quite a lot to look forward to. Then we'll be keeping our eyes on that space and definitely get a word from you from time to time on how things are evolving in that space. I've been speaking to Dipankar Rustagi. He's the Chief Executive Officer of OmniRetail.